Are you looking for a way to grow your wealth outside of the traditional ways of investing like stocks, bonds, mutual funds, and real estate? What if there was a way of investing in private real estate markets without the headaches of being a landlord? You know, landlord-tenant board, tenants, toilets, the usual. Welcome to the channel. My name is Odain Harding, and I'm a real estate agent. All that I ask is if you learn anything in this video, just give me a like and subscribe to the growing community. I've helped many people make moves in the real estate market. And if you're in that position, book a call with me with the link in the description. As a real estate agent, I know that building wealth isn't just about buying and selling homes. It's about making smart investment moves. That's why I hosted this exclusive webinar with Ryan Bates from Equiton, a leader in private equity real estate investing. In this video, Ryan breaks down what private equity is and how it works, the potential returns, and how everyday investors can tap into this opportunity. This webinar is packed with insights that can help you build generational wealth. So let's dive in.
And what we do with Equiton. Equiton is a private real estate company. So I'm happy to be going into how we see what others don't. But before I kind of get into everything, I just want to take kind of a big step back and take a look at the Canadian real estate market in general. You see every single day there's a new headline, no matter what publication it is, the Globe and Mail, the Financial Post, whatever it is, Toronto Star, CBC, there's a new story about the challenges in the real estate market, particularly the challenges of home affordability, rent prices going up, rent prices going down, interest rates going up, interest rates going down. There's a lot of information that's being thrown at you as an investor or even as a homeowner or a home renter. So how are you going to make sense of all this? And I'm just going to give you a little bit of an idea of how we can help you do that as well. The greatest challenge that Canada has right now in the housing market has a lot to do with home affordability. And particularly here in the Greater Toronto area, we have some of the most expensive home prices relative to incomes anywhere in the world. We consistently rank in the top 5 in an annual report published by UBS. And so there's a lot of ways that we need to break this down in order to kind of alleviate the crisis that we're experiencing in the housing market and affordability, supply and demand, all these different things. But what's really driving the home affordability crisis and the supply and demand crisis in the Canadian real estate market? Well, the first thing is on the demand side, that's going to push prices up very quickly, and it's going to push rents up as well. And that increase in demand here in Canada has primarily been driven by an outsized increase in immigration figures for over the past 5 years. So what we've seen is an unprecedented number and percentage of growth in Canada's population driven by this immigration, but we haven't had the requisite homes being built to take in and absorb this new population. And immigration to Canada is one of the primary drivers in economic growth. It's a very necessary tool that we're able to use and draw on. So while over the past year or two, the Canadian government has come out and said that they're going to decrease immigration figures, the number's still in the hundreds of thousands of more people coming in each year for the next several years. And this is after already having another 5 years in the past where we brought in more people than we were able to house. So there's still a massive imbalance in the supply compared to the new demand that we've brought on in the country. And one of the things you might say is, okay, we live in Canada. Canada is the second largest country in the world by land area. Why don't we just use all that land to build more homes? Well, obviously, as many of you know, it's never going to be as simple as that. Particularly, the first reason would be is that people choose to live in places that they want to live. And the places that they want to live are going to be places that give them a good job. Their kids can go to a good school. If they get sick, they can go to the hospital, they can visit family, and on the weekends, they have something to do. So that's why you see a rapid trend over the last 150 years of urbanization, not just in Canada, but all around the world. We're a rapidly and increasingly urbanized society. So in places like the Greater Toronto area, People choose to live in Toronto, Mississauga, Burlington, Kitchener-Waterloo area, and they choose to live in these places because they can get a good job, kids can go to a good school. So the cities have been increasing in population size. But as well, we can't expand any further in the geographic footprint for the Greater Toronto area in particular because we have the green belt. We're limited in the actual land that we're able to develop and urbanize. So we need to make the best use of the land that we already have and have already chosen to have urbanized. So now you know a little bit about what's going on in the Canadian real estate market, but let's take another step back and speak a little bit about different types of investments and why you should be looking at something in the private markets or what's known as an alternative investment. So traditionally, your financial advisor would tell you in your investment portfolio, you should allocate roughly 60% to public equities in the stock market and 40% to fixed income for a more conservative income-based approach. Over the past 20 to 25 years, this has been changing rapidly. There's still a great share of your portfolio wanting financial advisors and investment experts wanting to allocate towards traditional stock market, equities, as well as bonds. But we're also adding in what's known as alternative investments. And these are investments that aren't listed on a public stock exchange, or they're not a brick and mortar asset like a business or a house or an apartment building that you own for yourself. It's in the private markets as well as being managed by a professional investment corporation. And this is where Equiton, the company, operates. And over the past 20, 25 years, I've mentioned that this has been taking up a bigger share of investment portfolios at all levels and all across the world because of some of the key benefits it provides. And one of those things is consistency and stability in investment performance. And that's something that has traditionally gone underappreciated when looking at investments. Now, why should you care about alternative investments, private market investing? Well, what I can tell you is some of the biggest and best investment managers all around the world have been allocating a greater portion of their investments towards this sector. And take, for instance, the biggest Canadian pension funds. If we look at the Ontario Teachers Pension Plan, they were one of the first pension plans anywhere around the world to actually actively invest their own money and not outsource it to a third party. And this happened nearly 30 years ago now. And them, as well as the Canadian Pension Plan, the Alberta Investment Management Corporation, the Ontario Municipal Employees Pension Plan, all the biggest pension plans in Canada have allocated increasingly to alternative investments because of the stability and consistency they provide, such that now they're investing over half of all of their portfolios towards this sector. And these are some of the smartest investment managers anywhere in the world. And that's why increasingly regular retail investors like you and myself have been starting to take notice on this specific sector. Why should you care about real estate in this sector specifically? So we all know real estate is something that can provide you that stable base of both value as well as income, an income component as well. When you combine it with the private markets, what you get is something that's really, really unique in that it's very uncorrelated to wider economic performance or wider investment market performance as well. So it's something that remains very stable in value, very stable in terms of profitability, and you can use it as a hedge against inflation, against economic downturns, everything like that. You're going to see consistent investment performance over time. And that's something that's really unique and something that you should be taking notice of. And one way that we can take a look at this in the form of data is by looking at something called the Private Canadian Apartment Index. And this is just an aggregation of all of the privately owned apartment buildings all across Canada and their investment performance over the past 40 odd years. And as you can see in this chart here, there has not been a single negative return year in the entire history of all the data that we have on this index. And as you can see, through Black Monday in the late 1980s, the Russian bailout in the 90s, the tech bubble and the 2001 dot-com crash, the global financial crisis, one of the biggest challenges that the whole world economy has faced since the Great Depression nearly 100 years ago, as well as the pandemic, the post-pandemic inflation crisis, and geopolitical turmoil. Throughout all of these different economic uncertainty situations, economic downturns, the private Canadian apartment index has still performed positively. And one of the reasons for that is because it's been coupled with a really stable asset class in real estate and a structure in private markets alternatives, as well as you're servicing a core need and you're providing a place for people to live with this type of investment. So it's something that you really should keep in mind. Now let's take a look back again at what's driving the demand for this specific investment here. I did mention population growth, and that's happening all across the country. There isn't a single area of the country that's not experiencing rapid population growth, and this is expected to continue for the next 25 years as well. So there's going to be an opportunity, no matter what, all across the country to benefit from this surge in demand we're going to continue seeing. And specifically at Equiton, we target individual communities that we have a long-term thesis on. And these individual communities, like I mentioned, they're places that people want to live, places that people can get a good job. If they get sick, they can go to a good hospital, their kids can go to a good school. They have growing economies, growing populations. So there's a really long-term investment approach to the communities we're looking to invest in. And this is going for not just up until now, but into the years to come as well. Now, what is specifically so special about Equiton, and what is the opportunity for you to capitalize on here? Now, Equiton, we're a private real estate investment company, and we have a decade of history managing real estate and developing real estate for our clients. And we provide this as an investment opportunity, as a vehicle for people to get some exposure to it without having to manage any of it themselves. And now we've grown today to manage over $1.3 billion worth of real estate, and we have nearly 16,000 clients all across the country who have benefited from these kinds of investments year in and year out. And I'm glad that everyone is here today to learn a little bit more about what we can provide you. We do keep it quite simple in that we have 3 different investment solutions, and some of them are more catered towards income-oriented clients, some are catered more towards growth-oriented clients. There's tax-efficient solutions. All of them are eligible for your registered plans, RSPs, TFSAs, LIRAs, RESPs, etc. And it's a very achievable entry point to be getting in with us. And it's just $25,000 minimum investment all across the board. And I'll get into a little bit about some of the specifics of the opportunities that we have. Our first investment option is called our apartment fund. This was the first fund that we started here at Equiton, and it's an investment into a portfolio of apartment buildings. And the way to think about it is that is very similar to investing into your own rental property. Let's say you bought a condominium in downtown Toronto and you rent it out to a tenant. The 2 ways that you earn a return from that investment are your monthly rental income, as well as the growth in the property value over time. And it's the same exact thing with this investment here, except it's just on a much, much larger scale. We have 47 individual apartment buildings, over 3,700 apartment units. So you get the benefits of diversification that come with that, wherein if you had your own rental property and your tenant, for whatever reason, doesn't pay rent for a couple of months, then that's going to have a really big impact on your investment return. But with us having over 3,700 individual units, we have the benefits of diversification such that one individual tenant doesn't have has only a marginal impact on the entire portfolio. Speaking of some specifics, the fund does target annual returns net of all fees between 8 and 12% each year. There's tax efficiencies towards this as well for people that are worried about taxation with their investments. You can use all of your registered plans. There's monthly income distributions as well. And it's a great way to gain exposure to a rental property investment without having to manage the property yourself. And you can also use all of your registered plans to benefit from the tax sheltering abilities of those accounts. And as I mentioned, this type of investment, private real estate investing, is very stable and very consistent. And this is the fund performance since the inception. We haven't had a single negative return month since the inception of the fund back in May of 2016. And now, if you had invested at the beginning with us, you would have doubled your investment. So it's been strong and consistent performance year in and year out, monthly returns. It's something that's just going to be a cornerstone of your portfolio that you don't have to worry about. You know exactly what you're going to be getting year in and year out. A good combination of monthly income as well as some long-term growth. Now, on the other side of our business, instead of just owning properties for people to live in, we also develop new properties for people to purchase. And this is our development business. And looking at the current development market here in Canada, what we've seen is outsized population growth, but we've also had a really, really significant downturn in terms of new housing starts. And why is this happening? Our population's increasing, but we're building less homes. So there's certainly been a lot of challenges over the past few years, and that's largely due to the post-pandemic rise in inflation and then the consequent increase in interest rates faster than any other time in our history, which put really big strains onto developers all across the country in terms of their ability to access capital, but also for the home purchasers, for them to be able to afford the home that they're purchasing. With higher interest rates, they're not going to qualify for a mortgage as easily as they would with a low interest rate. So now the market's sort of working through all of these kinks that have happened over the past several years, and Equiton's in a really strong position to benefit from it, as we've kind of gotten through the worst part of it now. As well, the resale inventory that's out there right now, there's a big focus on investors, on investment style condominium units, whereas Equiton's focused on more end user focused homes with certain features that make it more valuable over the long term for the person living there, as well as for an investor. As well as the regulatory environment is changing. The different governmental bodies have woken up to the need for more housing across the country, getting projects approved much quicker. And we're there at the forefront of that as well. So in terms of sustaining the supply of the Canadian real estate market, we've had this outsized population growth, but we haven't had the homes to actually service this increase in population. What we need to have happen is we need to have prudent developers like an Equiton who can identify a good project in an area that's high in demand for housing, where there isn't a lot of existing density, and be able to provide the housing on time and on budget to the people that want to live there. And we have to not only catch up with the past in terms of population growth that we've seen and the housing that hasn't been built, but we also have to plan for the future as well. And really, all of these choices today matter in terms of the long term for the real estate market. What we do today is going to impact what the housing market looks like tomorrow. So that's why we as a developer are choosing to be active, choosing to stick with it and go ahead and build these homes. Because we know further down the line when these projects hit the market, we know that there's going to be a demand for people to live in the areas that we're building, and we need to be a part of the housing crisis solution and not part of the problem. So how are you going to benefit from this as an investor? So Equiton, we offer our development projects to folks like yourselves as an investment opportunity. And right now, the one open for investment is called our 1099 Broadview project. It's a mid-rise condominium here in the city of Toronto. The address is 1099 Broadview Avenue, just north of the intersection of the Danforth and Broadview. So it's a fantastic neighborhood. And what we're looking at is transit-oriented with a subway station just down the street. There's a major highway, the Don Valley Parkway, right adjacent to the property. And this area that we're looking to build in is one of 6 places in all of Toronto that has a major highway series and has a major subway line in the neighborhood. But it's the only one that hasn't been developed for density. We haven't seen any new developments like we have in Etobicoke or North York or Yorkville or any of these places. So it's kind of the last spot on the map that has all of the amenities for people wanting to live there, good transit, great schools, hospitals, everything that you want in a place to live. But there's not a lot of housing there. And so we're looking to build there to provide housing for the young upper middle income families who want that starter home, want to start building their equity, Also, for the downsizers or the empty nesters who don't want to manage a full single family home property. Also, there's just people that would choose to live in a condo. They just don't want to have to manage taking care of a full property. And then we also want to be providing value to investors over the long term. And because we're focusing on the end user, it's providing more value for that investor in the long term. But you as an investor into the project are getting in at the very beginning before we've actually gotten shovels in the ground. We're bringing it through the zoning and permitting phase. And once we've completed the project and all the units are sold off, you receive a profit payout after getting your initial investment back. And we're going to target that to be 103% of your initial investment. So that target is to double your investment by 2029 if we reach that timeline. And the way that it works is that you're only getting paid at the end of the project, but you are compensated with that much higher return. Again, the minimum investment is just $25,000, a very achievable entry point. And you can tuck it away in any of your registered plans, your retirement account. You don't want to look at those funds until retirement anyway. So put it into a project that you're going to see payout in a few years' time with a very nice long-term growth return. And it's going to be a great option if you're looking for some long-term growth in your portfolio. Now, speaking of the specific location here, I did mention that in the neighborhood it hasn't been developed for density. If you can see my cursor here, it's a lot of greenery, a lot of single-family homes here. And this is where our site is at 1099. There hasn't been a lot of density built up there. And because there's single-family homes, a lot more desirable, especially in an area like this. It's very out of range in terms of price point for a lot of folks that are looking to purchase their first home. And it's too much home for the downsizers, the empty nesters. And so we're providing that new housing in a mid-rise condominium format. And as I mentioned, you've got the Broadview station just down the road, got the Danforth Music Hall. Along Danforth Avenue, there's the Greektown Festival every summer. And just across the bridge of the Don Valley, you have Yorkville, which is where I live. So I know this area very well. I was actually there just yesterday for Valentine's Day. It's a fantastic area. You can get anywhere in the city very quickly. You have all that you need right at your doorstep. So it's going to be a great place for people to live. And we're really, really excited about the location. And how these projects work is there's different phases to each project, obviously. This project is currently in the zoning and permitting phase. We submitted our initial application to the City of Toronto back in the spring of last year. So now we've just been having ongoing discussions about how the city wants the format of the land to look, what they want the facade of the building to look, how we want the units to be sized, and how we want everything to look in the end. And it's been very, very positive discussions that we've been having with the City of Toronto. Over the past 6 to 9 months or so, the city has really picked up its pace in these discussions for zoning and permitting because they understand the absolute dire need for new housing to be built all across the city. Once we actually complete the zoning and permitting, have all of our approvals, then we'll apply for a site plan approval, which we do ongoing at the same time as the zoning and permitting. And that's going to tell us exactly what we're going to be allowed to build, what the floor plans are going to look like, what the unit sizes are going to look like. But what that also means is that we can launch the pre-sales process. And when we launch the pre-sales process, we want to hit a certain threshold of units pre-sold, get the first deposits, and then we can actually go out and get our financing for construction, get shovels in the ground, get this thing built. That'll take a couple of years. And then we'll complete the pre-sales during that process as well. And once it's all complete and we've received all the final deposits, we hand over all the keys, get the condo board formed. Then we can actually just repay the construction financing, return initial investments back to investors. And then what's left over is the net profit on the project. And that's when you get your profit payout, which we're targeting at 103% of your initial investment. Now, looking at that timeline again, right now we're right here at the beginning of 2025. We're still in the early days of the project. There's still a lot of work to be done here. But what I can say is that everything is going on time and on budget, just as we would like it to be. And we're hoping to be hitting pre-sales sometime next year. And then sometime later in the year in 2026, maybe early 2027, we start construction, and then by 2029, we want to finish this thing up, get everyone moved in, and get you that nice profit payout. Now, the last investment solution that we have is called our income and development fund. And like the name says, there's two components to this fund. There's income producing real estate investments, and then there's real estate development investments. So the income producing side, what you have is a portfolio of commercial retail properties here in Southern Ontario, anchored by really strong blue chip tenants that pay us rent every month, like clockwork, very stable income producing component there. There's also a small component of lending and financing to other real estate developers. And what that's going to do is that's going to provide you a baseline income producing component in this fund year in and year out. And then on the real estate development side, you're invested into a portfolio of all of Equiton's different developments. And when each of those developments completes, you'll receive a special profit payout. And that's going to bring the targeted return of this fund to 12 to 16% on average. And that's going to be split between that income producing component and then the development profit payout component. Again, the minimum investment is just $25,000. It's eligible for all your registered plans. And the great thing about this one is that you have the backbone, you have the backdrop of the income producing component that's going to provide you those steady monthly returns. You can tuck it away into your registered plans, but you're also getting the upside coming from those real estate development projects. And there is a monthly liquidity option in this one if you're not comfortable being locked into the investment like in an individual development project, but you still get the benefits of the profit payouts at the end. So this is a great option for someone who's both income and growth oriented, and they have some registered funds they'd like to invest, or they just want to get both income and growth in their portfolio. And like I said, similar to the apartment fund, this has just been a very stable and consistent performer since we started it back in the summer of 2019. As you can see, not a single negative return month, not a single negative return year. It's just been steady growth throughout the years. And what I can say about this fund is that we have a development project that we're actually targeting to complete later this year. So right now is one of the best times to get invested. So you can look out for something on a near-term horizon with a profit payout coming from a project. So it's a great time to get invested there. And there hasn't really ever been a better time. So I'll just pause it right there to see if we have any questions, or if O'Dane, you have some questions you wanted to get answered as well.
Yeah, thank you, Ryan. I just wanted to say that for letting all of us know what the opportunities are that lie with Equiton. Yep. So I definitely appreciate that. And I wanted to thank everybody for being here and being patient. And me, I finally figured out how to disable or enable the chat. So you guys should be able to chat there and write your questions down or in the question and answer section. For me, I do have a question. I have two. Yeah. With the monthly distribution, can that be reinvested, or do you have to take the profit?
Yeah, so that's a fantastic question. For both the apartment fund as well as the income and development fund, that monthly distribution, you absolutely can reinvest it back in. It's called our DRIP program. And the great thing about the DRIP program is that when you reinvest at a 2% discount to the market price. So you just get a little extra compound growth there for taking that option. And it's great, especially if you're using registered plans, because you don't want to be withdrawing the money anyway. So it's good to just compound that growth for the long term.
Absolutely. Absolutely. And my second question is, when you're invested with the development fund, do you get access to purchase any of the units in the project?
Yeah, so when you invest in the development project, you as a client, you get the first look in the friends and family round of pre-sales, which has the best pricing, the best benefits and features and everything like that. So you get the first look at purchasing the units, which is great because a lot of all of our different clients and investors, especially if they're in the Greater Toronto area, they're active real estate investors themselves. They invest in the project because they love the project, but they also love the way that the units look in the area that we're developing in. So they want to be part of that long-term value creation that we're looking to build, the brand that we're looking to build as well. So absolutely, they get the first look there.
Okay, awesome.
I see Meeks asked a question: if investing through an investment account like an RSP, are there tax shelters? So the way that it works with registered plans is that you absolutely can invest using all of your registered plans, and all of the returns that you accumulate in those investment accounts are not taxable while the investments or the funds are still in the account. But for example, with an RSP, when you start to convert it into a retirement income fund, or if you make an early withdrawal before retirement, that's when there are tax implications. But while it's still held in the account, there isn't any immediate tax implications there.
Awesome. Does anyone else have any questions?
And as well, if anyone does have any questions that they think of later on today, or just later on in the week or whenever it is, you can feel free to reach out to me directly. I'll put my email in here in the chat, and you can reach out to me with any questions. We can set up a time to chat just between us, and we can go through the options in a little bit more detail.
Awesome. And I see some questions about the recording. So I am recording it and I will make it available for you guys. I'll send it out to everyone.
Yeah, if anyone is interested in learning more, or you have other folks, family, friends that you think would be interested, then absolutely, I'm happy to have a discussion with them. And Meeks, I see another question. Do you guys only operate in Canada or overseas investments as well? Note, we are strictly 100% Canadian owned and 100% Canadian operating. All of our projects, all of our properties are here in Canada. We don't have any immediate plans to expand outside of Canada. I don't have a crystal ball, so I don't know what's going to happen for the future. But right now, what's been successful for us is operating in regions that we have domain expertise, and that's in certain markets here in Canada. But yeah, we're just operating in Canada for now.
I may have missed this. However, just wondering, can you transfer out from another investment account, for example, withdraw from a tax-free savings account, then invest in one of the funds you have available?
Yeah, so the way that it would work is that you wouldn't even need to withdraw the funds from your TFSA. You would just need to transfer that TFSA account over to one of our partner institutions, and you can make the investment using the funds in the TFSA. So you don't have to make any withdrawals, and you can still benefit from the tax sheltering in the TFSA. So I see Bianca asked, other than Ontario, what provinces do you develop in? We only develop here in Ontario. We have a development project in Guelph, 3 in Toronto, and 1 in Ottawa. But in terms of other provinces that we operate in, we own 3 apartment buildings in the Edmonton area of Alberta.
Meeks asked another question. How would it work transferring funds from a lira and the penalties that I'm not sure if it's a guy or a girl, but that you will incur?
Yeah, great question. So same thing with a lira. You would just need to transfer the lira account, the lira fund, over to one of our partner institutions. You wouldn't need to make any withdrawals, and then you can hold the investment in your lira account. And I've done this several times with a bunch of my clients. They don't know what to do when investing their lira. They don't know if they're able to make a withdrawal, but you can rest assured that you don't need to withdraw anything from the lira. You can just transfer it over and make the investment in the existing lira account.
Any more questions? Thoughts?
Again, if anything else comes up, feel free to reach out to me directly, send me an email, and we can set up some time to discuss a bit further. And I'm happy to help any of you or anyone else that you think might be interested in learning more. Yeah, of course. And thank you very much, guys, for joining today. And thanks for adding your questions. Please feel free to reach out to me directly if you want to have another discussion.
Awesome. Thank you guys for coming out and participating on a Saturday afternoon. I know it's not probably the thing that you wanted to do on a Saturday, but I mean, it is snowing. And Ryan, thank you for letting everyone here know of everything that Equiton provides and the opportunities that exist today, and for providing your email so that they can reach out to you and have that further conversation.
Yeah, absolutely. It's been great discussing with everyone here, and again, appreciate the questions and appreciate you, O'Dane, for having me on today. And look forward to having some more discussions in the near future.
Absolutely, my pleasure.
All right. All right. Take care, everyone.
All right, take care.